Welcome back to Market Day Reports. I'm Scott Sheldy, otherwise still known as a cow guy, I think. Let's take a look at the markets because we've been kind of just laying there, waiting to see what this weather's going to shape up to going into the close today. So let's take a look at corn. The corn table brought to us by Bar Chart. Yeah, actually not just laying there. We're giving up some more gains over here in the corn. 12 3/4 cents lower at 5.51 3/4. 14 cents lower in December at 5.47 1/4. It was only just a couple of days ago we were trying to fill that gap back up at 5.73. What do the soybeans have in store for us? Not too bad. 8 3/4 cents lower in the August at 14.07 1/2. September down 6 3/4 at 13.62 1/4. And then lastly, new crop, no beans, trading at 13.56 last. That's down 6 1/4 cents. Chicago wheat, not too bad. 4 3/4 lower in the September at 6.87 1/2. We've got December off 4 3/4 as well at 6.96 in the orders. And let's take a look what we've got happening over in Kansas City. Kansas City, here we come, right? Hard red wheat in Kansas City, not too bad, just a little bit easier. 2 1/4 cents lower in the September at 6.51 1/2. 2 cents lower in December at 6.62 3/4. And then lastly, Minneapolis wheat. Minneapolis really giving up the gains now today. 17 3/4 cents lower at 8.86 1/4 in the sub contract. December at 8.75 1/2, and that's 16 1/2 cents lower. To give you a clue, 8.75 is the low in Dece, and 8.97 in the orders is the high. All right, now we're lucky enough to have my good friend Todd Horowitz from Chicago, otherwise known as Bubba. Bubba, how you doing? That was a mouthful. Let's talk about what you think's happening in the grains. We got more weather reports. We've got a lot of issues out there that we have to deal with here, but we just kind of feel like we're kind of standing here, maybe even drifting a little easier. What are your thoughts?
Good morning, Scott. Well, I think the markets are an exercise in futility right now. I mean, we're really just churning between tops and bottoms and haven't really broke to the downside, nor have we broke back to the upside. You know, this is typical. We're right where we were Monday when you and I talked. We're back at those same levels after a rally for a couple of days. And I think that you're going to see more of this. You know, you have to remember this time of year is so thin with volume, and you've got, those trying to predict the weather and, trying to position themselves for the weather. And we get these moves that are bigger than you would think because there's nothing in the way to stop it.
Right, and we try to trade the weather in all three of those pits, soybeans, wheat, and corn, and it gets more difficult as time goes by. And again, we have these mini USDA reports, which are the weather outcomes at, say, noon today, or we'll get some new news. But the market's really not been surprised, and the market doesn't like being surprised. And even though I find it peculiarly interesting, and I'm not going to try to say that again, but I think it's interesting that the fact that we have hot and dry, we've got that big ridge, 100-degree weather through some of the really key crop growing zones, and the market just drifts lower, right? Because we're not surprising it with any new heat. Now, we might get some stuff that's 10, 15, 25 days out, and that would surprise the market. But right now, you wake up, you can tell the weather report by how the market's doing in the morning, don't you think?
100%, Scott. And look, we know one thing. The more efficient markets become and the faster that news flows, the less surprises that the markets have. And I think that's the biggest story is we have to just be able to trade or hedge off the price action and not try to forecast what's going to happen, because the bottom line is price, and price is the king. I mean, I think that's what we have to learn as traders or hedgers or farmers, is not to get too overwhelmed one way or the other. Let the markets tell you where it wants to go, because likely the market is always right.
Exactly right. Well, you know what? What makes me nervous is that you and I agree right now. How about that? Well, you know what? We're going to take a quick break here. That's Todd Horowitz, Bubba Trading. We're going to go away, pay some bills, and come back and talk about the proteins with Todd after this. Welcome back to Market Day Report. I'm Scott Sheldy, still the cow guy. We've got a good friend on the line with us, or Skyped in Todd Bubba Horowitz. Todd, stay there. I'm going to go through these prices, and we'll come back and get your expert advice on what we should be doing with these prices. Live cattle. What do we have? Live cattle, they're a little bit better today. Kind of a quiet market. We took a look at the volumes earlier. Not a lot going on. As Todd said in the last segment, things are kind of quiet at this time of year. 70 cents higher in the August contract at 121.50, 67 cents higher in October at 127.35. Now let's take a look at the feeders. Feeders got a bump because of those input prices coming down. So we're $1.50 higher in the August at 159.70. Close to bumping up against those highs, right? 159.97 was the high in August. We're up $1.75 in September at 162.45. Only about a dime, 15 cents off of those highs in September as well. So you can kind of get a feel for what's happening late in feeders as we go into the close. We've got a cattle on feed report later on today. Lean hogs, let's bring up the lean hogs. A little bit of a mixed trade here. 57 cents higher in the fronts, August at 107.22. We've got October up $1.07 at 92.80, but you go out to the deferreds, April starts to tail off. We're off about 25 cents in that April contract at 88.22. Todd, come on back in. Todd Horowitz with Bubba Trading. Todd, I just said, gave all the prices. You know we've got a cattle on feed report, and you know we've got some hot weather, and you know a lot. Why don't you impart some of that knowledge on us and tell us what you think?
You know, Scott, I think what you're going to see here, look, they're obviously expecting a more bullish report, which is why we're seeing higher prices in cattle. And the extra bonus for feeders is, of course, the lower prices in corn. But, typically we get disappointed by numbers because we've overpriced in our expectations. And I think I don't think it'll be any different today. I think you're going to see cattle continue to churn in ranges right now. As we go back to the markets are just very, very quiet, and there's not a lot going on, and you do have some rumblings throughout the country. And I know we're not going to shut down, or we shouldn't shut down, but we do have, the masks going back into place, and are people going to start staying away from restaurants and things like that again? So we'll see how it all works out. But right now, we're in the middle of nowhere and really just churning back and forth in markets with no particular place to go.
Well, we've got a lot on the docket, and obviously we've got the cattle on feed, we've got heat, we've got a lot of things out there that we have to worry about. So we're all going to go home and worry this weekend, Todd. Thank you very much for your market analysis. That's Todd Horowitz of Bubba Trading. He's in Chicago. I'm in Nashville, and I'm going to hand it over to Janet, who's also in Nashville.